AMD has just hit a financial milestone that sent shockwaves through the entire semiconductor industry. Quarterly revenue officially surpassed $10.03 billion, but the most striking part of this result isn't the size of the revenue, it's the fact that profit growth has, for the first time, completely pulled away from revenue growth at a 40% trajectory. This marks AMD's full transition from burning cash to buy market share to harvesting high-margin profits. Under NVIDIA's seemingly airtight dominance in compute, AMD hasn't just cracked open a gap. It has proven through this earnings report that it now holds real pricing power in defining the cost of compute. Hey everyone, welcome to Deep Dive Stock Earnings. If the old AMD was merely an AI challenger fueled by investor expectations, today's AMD, powered by the scaled deployment of its Instinct GPU lineup, has officially evolved into an enabler of compute democratization. In this episode, we're going to break down how AMD engineered a financial turnaround through its data center business. The simultaneous explosion in revenue and earnings is the strongest proof of AMD's current financial logic. Full-year revenue reached a lofty $34.06 billion, with a record-breaking fourth quarter, putting a definitive exclamation mark on the year. Even more revealing is non-GAAP EPS, which surged to $1.53, up a massive 40%. This phenomenon, where net income growth far outpaces revenue growth, fully reflects the operating leverage unlocked by AMD's transition to advanced process nodes and heterogeneous computing. Every dollar invested is now generating outsized profit returns. This tells us AMD now has powerful internal cash generation and financial flexibility. For years, the market worried that massive R&D spending would crush margins. What's happening instead is the opposite. As high-priced AI chips and high-performance EPYC server CPU ship at scale, AMD's per-unit profitability is rising rapidly. The data center segment has unequivocally become AMD's primary value engine. Quarterly revenue in this segment hit a new record of $5.04 billion, up 39% year-over-year, beyond EPYC server CPUs continuing to lead in process, technology and energy efficiency, steadily eating into competitors' installed base. Real surge came from the broad rollout of Instinct MI300X. This marks AMD's AI hardware crossing a critical threshold from lab benchmarks to real-world deployment across global hyperscale data centers. The deeper significance of this structural transformation is that AMD has fundamentally rebuilt its moat. It's no longer a backup option in the server market. It has become a core component of the AI compute stack. Large-scale MI300X shipments prove AMD can compete head-on with the industry leader at the very top tier of hardware architecture. Against widespread pessimism around long-term decline in PC and gaming hardware, AMD's performance is almost counterintuitive. Client segment revenue rose 34%, while gaming revenue surged 50% against the trend. This growth reflects not only strong demand from enthusiasts for high-end platforms like Zen 5, but also the far more resilient long tail of the console market. Consumer appetite for high-performance computing continues to underpin stable growth in this segment. This resilience directly shatters the so-called hardware sunset narrative for core gamers and professional creators. High-performance hardware is productivity. It's a necessity, not a discretionary purchase. AMD's edge here lies in its chiplet-based design, which delivers a superior balance between cost and performance. AMD's ROCm software stack has finally reached a decisive milestone. According to recent disclosures, the large-scale model CIY1 has been fully trained end-to-end on AMD MI300X hardware using the ROCm software environment. This breakthrough directly addresses AMD's long-standing software weakness, competing at the model training level. The highest technical barrier in AI signals that AMD's software ecosystem has crossed the usability threshold and now possesses true top-tier commercial competitiveness. This is the final puzzle piece investors have been waiting for years. CUDA's closed ecosystem was the biggest natural barrier, preventing large customers from switching to AMD. With mainstream large models now running successfully on ROCm, that monopoly is starting to crack. Once the software barrier falls, global compute buyers regain real choice. AMD has demonstrated remarkable strategic foresight by targeting the deepest layer of AI infrastructure's last mile. Through a strategic joint venture with Cisco, AMD plans to deliver gigawatt-scale AI power infrastructure by 2030. This move from chip manufacturer to energy infrastructure architect signals that AMD clearly understands the true determinant of future AI competition, not just compute capacity, but guaranteed power supply. This is a genius solution to the industry's ultimate bottleneck today. Data centers aren't struggling to buy chips, they're constrained by power availability. Expensive chips sit idle with no electricity to run them. By embedding itself into gigawatt-scale power architecture design, AMD is effectively paving the road for its future chip sales. Embedded revenue grew just 3%, but the signal it sends is highly symbolic. This segment, largely built on Xilinx assets, stabilizing and rebounding, marks the official end of a 2-year semiconductor inventory correction. As downstream inventory levels bottom out and purchasing behavior normalizes, this high-margin, high-stickiness business is reclaiming its role as AMD's profit anchor. The end of inventory correction removes the last hidden deceleration missed from AMD's earnings, while embedded doesn't command the same spotlight as AI. The steady cash flow it generates across aerospace, industrial, and communications markets provides the financial backbone that enables AMD's tens of billions dollar annual R&D investment. From a balance sheet perspective, AMD exhibits exceptional defensiveness. Cash reserves climbed to $10.06 billion, while quarterly free cash flow reached $1.01 billion. At the same time, the company continues to invest roughly $10 billion annually without relying on heavy debt. This self-funded innovation model ensures AMD has far deeper breathing room than competitors when macro conditions turn volatile. In summary, AMD has completed its transformation from backup option to foundational pillar, to hardware parity, software ecosystem breakthroughs, and forward-looking energy strategy. It has built a complete competitive matrix. I'm deep dive stock earnings, and I'll see you in the next one.